Something unusual is happening in the metals market. In 2026, gold is not just another investment, it's becoming the primary safety asset for big institutions. According to major banks, including Bank of America, gold is expected to outperform not because of hype, but because of growing economic pressure. What's even more interesting is silver. While gold is seen as stability, silver is showing signs that are making governments uncomfortable. This is not panic. This is not my prediction. In this video, we'll break down why gold is winning in 2026 and why silver is quietly becoming a problem governments are watching closely. So, what makes 2026 so different? It's not just one thing, but a combination of factors that are creating a unique economic environment. 2026 is expected to be different from previous years because global debt levels are higher than ever before. We're talking about numbers that are difficult to even comprehend. At the same time, economic growth is slowing down in major economies around the world. And to top it all off, geopolitical and economic uncertainty is on the rise. We see it in the headlines every single day. In environments like this, the big players, the institutions, the central banks, the massive funds, they change their strategy. They don't chase risky, high-flying returns anymore. Their priority shifts. They start to protect value, to preserve the capital they already have. It's a move from offense to defense, and it's a crucial signal about where the smart money believes the world is heading. This isn't about getting rich quick. It's about not getting poor slowly. This brings us to gold. Why is gold winning in this specific environment? Gold has a unique characteristic that no other asset really has. It performs best when confidence in the traditional financial systems starts to weaken. Think about it. When people become less sure about currencies, about government bonds, or even about the stock market, they look for something real, something tangible. It's not a speculative play to double your money overnight. It's about preserving purchasing power over the long term. It's a financial anchor in a stormy sea. There's a key line to remember here. When uncertainty rises, gold doesn't need excitement. It needs trust. And right now, trust is exactly what it offers. Gold isn't a story of rapid growth. It's a story of enduring stability when everything else feels shaky. It's the quiet, reliable asset in the corner that everyone turns to when the party gets too loud and unpredictable. Now, let's dig deeper into why the big banks, the ones with teams of analysts and economists, prefer gold in times like these. According to institutional research from major financial firms, gold is consistently viewed as a hedge. A hedge against what? Two main things: currency pressure and policy risk. Currency pressure is the risk that the money in your bank account, whether it's dollars, euros, or yen, will lose its buying power due to inflation or devaluation. Policy risk is the danger that a government will make a sudden decision, like printing more money or changing interest rates unexpectedly, that could negatively impact your investments. Banks don't trade on emotions. They don't buy or sell based on a feeling or a hot tip. They operate on data, models, and risk management. They prepare for scenarios that most people prefer to ignore. They run simulations for financial crises, for sudden market downturns, and for periods of high inflation. And in many of those scenarios, holding gold is a key part of their strategy to protect their balance sheets. They see it as a form of financial insurance. You don't buy insurance hoping your house will burn down. You buy it just in case it does. For these institutions, gold is that insurance policy against systemic financial risks. Okay, so we've established why gold is seen as the safe haven. But now let's talk about the more volatile, more interesting sibling, silver. Why is silver making governments nervous? Silver is different from gold in a very fundamental way. It has a dual personality. On one hand, it's a monetary metal, just like gold. It has been used as money for thousands of years and is still seen by many as a store of value. But on the other hand, silver is a critical industrial resource. It's used in everything from solar panels and electric vehicles to electronics and medical equipment. This dual demand, from both investors and industry, creates a unique situation. It means that supply disruptions, say from a mine shutting down or a sudden spike in industrial demand, perhaps from a new green technology, can cause sudden and dramatic price moves. And here's the critical part. Unlike the gold market, which is vast and deep, the silver market is much smaller. And smaller markets move faster and more violently. A relatively small amount of money flowing into or out of the silver market can have a much bigger impact on the price than the same amount of money in the gold market. Governments and central banks watch this closely. They prefer stability. They don't like assets that can have unpredictable, explosive price swings because it can disrupt financial planning and create economic uncertainty. There's a saying that captures this perfectly. Silver doesn't warn before it moves. It can be quiet for years and then suddenly make a move that catches everyone by surprise. That unpredictability is what makes it a source of quiet concern for policymakers. So, with all this information, what does it mean for you? We have gold on one side and silver on the other. How should an individual think about this? It really boils down to one simple concept: risk. Gold offers stability. It's the bedrock, the defensive player on your team. It's designed to hold its value and protect your wealth during uncertain times. Silver, on the other hand, offers volatility. That volatility can mean the potential for much higher returns, but it also comes with a much higher risk of sharp downturns. The choice between them is not about trying to predict which one will perform better next week or next month. It depends entirely on your personal risk tolerance and your financial goals. The big institutions, as we've discussed, almost always prioritize protection. Their primary job is to preserve vast amounts of capital. Many individuals, however, are often drawn to the potential for higher returns and are willing to take on more risk to chase them. There's no right or wrong answer here. It's a personal decision. Are you building a fortress to protect what you have, or are you building a rocket ship to try and reach for the stars? Gold is the fortress. Silver is the rocket fuel. So, as we look towards 2026, the picture becomes clearer. According to the analysis from major banks and financial institutions, gold may very well lead the way as the preferred asset for stability and wealth preservation in a world filled with debt and uncertainty. Meanwhile, silver, the wild card with its industrial and monetary demand, could surprise many investors with its potential for volatility. The key takeaway from all of this is not to get caught up in trying to guess exact prices. Don't worry about whether gold will be at one price or another. Instead, focus on understanding the different roles these metals play. The most important question you can ask yourself is this: right now, in your own financial life, are you more focused on protection or are you more focused on opportunity? Your answer to that question will guide you far better than any price forecast. Let me know in the comments what you think. Are you focused on protection or opportunity? Thanks for watching.